This idea that this alarming headline right here, right? Wall Street has spent billions buying homes. A crackdown is looming. And it's a story essentially that, to no surprise, with the commercial sector doing what it does, Wall Street is smart. They ran to single family homes, and particularly during the pandemic. And there's been these large institutions buying large swaths of single family homes. It's created a bit of a backlash in certain communities. Politicians and lawmakers have caught wind of this thing, and there seems to be some kind of bipartisan support saying that this might be an issue because it's driving up prices for people trying to buy their first homes and things of that sort. GC, what do you think about this headline and this story?
I think this is a great opportunity to mix data with perspective here. I think the narrative that Wall Street is buying up all of these homes and stepping in the way of the American dream, there are certainly parts of that may be true in certain circumstances, but there's another side to the coin. And I think we need to be able to look at the data, take in the perspective, and see all perspective, because there are some negatives. There's a whole lot of positives too. And if we only focus on the negatives, then we might draw, the wrong conclusion. So I put some of those data points together. I thought we would first start with this idea that Wall Street is buying up all of these homes. And I went back and I said, well, how can I really see the impact of how much Wall Street has been buying? And can I go back over time and see, is this a new phenomenon? Is this been around for 15 years? And so I put some of the stats together here. So what we're looking at here are the total of investor purchases in Jacksonville, Florida since 2006. Investor purchases would be institutions like Wall Street buying properties, as well as people like you and me who buy properties in our company names. So that's the way that this is defined. And so if you can actually look back from 2006 all the way to 2023, Pablo, just what do you see here? What jumps out to you? What's the first thing that
Pretty flat.
Right? I didn't know this before I went and put the data together. I knew that investors had purchased, call it 30% of homes in 2021 and 2022, but I didn't know if it went from like 4% to like 30%. But looking at this gives us a little bit more perspective. Going back in 2006 to 2023, the average rate of investor purchases, which would include institutions, is about 20 to 25% of all purchases in Jacksonville, Florida. So the fact that we went up to 30%, and at points it was a little bit higher than 30%, that's not like going from 0 to 100 miles an hour. So then I want you to look at one thing there. Look at 2013. What was the rate of purchases in 2013? 30%, right? 30%, the same rate that was being talked about profusely over the last couple of years. But nobody was talking about that in 2013. Well, there's a couple of reasons, and I want to dive into them. One of the reasons why people are really concerned about Wall Street and their involvement here is because of this thought that Wall Street is pushing up rent prices and home prices. And there's a lot to that. 2013, we had 30% of all purchases being done by investors. Wall Street would be lumped into that. Let's go to the next slide. Because in 2013, I ran back and looked back at the rent data. In 2013, investors made up 30% of all purchases, but rent only went up 2%. That's actually 44% below what the historical average is of rent price increases in Jacksonville, Florida. So the theory here is that Wall Street has created a monster, and that when Wall Street gets involved, Wall Street with their big wigs and they're always smarter than the rest of us, that they're pulling this lever and pushing up rents. But that's not really what the biggest problem is here, right? Home price affordability is a big concern, and I'm very concerned about that for our country as well. But the biggest problem is not Wall Street. The biggest problem is a lack of supply. And there are things that are within our control to be able to increase supply. And if we do that, we wouldn't have seen home prices go up as much as they did in 2021 and in 2022. We still would have seen them go up significantly because the debt was so inexpensive at that point. But it was like a perfect storm. Wall Street was a part of it, and Wall Street did compete with first-time home buyers in 2021 and 2022 when it came to buying assets. That is absolutely true. But Wall Street's involvement is not the reason why home prices went up. The real reason, the big thing that we need to solve is affordability. And the biggest driver of affordability is a lack of supply. I mean, that's the biggest reason why, even as interest rates have gone up to almost 8%, home values in Jacksonville and across the country still have gone up. It's a supply issue.
That's an interesting
That's my
take.
first take.
Yeah. Like if I can jump in on that, right? I did not see this coming, right? I love this data with perspective that bring to the table. I saw a bunch of like opportunistic times where a bunch of people just moved to Jacksonville from the north. Like they just came from more expensive places. I heard investors complaining about competing with Wall Street. I never heard first-time home buyers competing with Wall Street, right? Like it feels like the first-time home buyers were already in the competition cycle of there just is not supply in this like workforce housing sector. Like it's really, really hard to find a home there. And then you have people coming from like New York and Miami and all these other markets that were moving to Jacksonville during that time, that for them it was just like really, really easy to go buy $150,000 condo to like write out the pandemic and then keep it. Right.
Yeah.
So, yeah, I mean, it's a really, really interesting take of yes, there is data that is saying that this stuff is happening. The data shows that there wasn't that big of a change historically in comparison to like where it's been. And two, just because it happened at the same time doesn't mean it's causal or even necessarily correlated, which is essentially what you're saying, which is what people are concerned about, which we're all concerned about, home price affordability.
Yeah, absolutely. This battle between Wall Street and first-time home buyers is emotional,
Yeah.
right? It's David versus Goliath, right? We can create that narrative. And unfortunately, that's what's being talked about. And when it comes to legislation, to stem that, that's a lot of what's being compared. So I just think data with perspective really helps here. I'm not saying that there aren't potential negatives to Wall Street being involved in single family rental properties. I'm just trying to look at it from all perspectives. This isn't the first time that Wall Street has become involved in the renting of American homes, and by default, right, the owning of homes indirectly, right? Apartments became institutionalized at some point, right? Still getting the data on it. I think it was around the 1980s when Wall Street really started to buy up apartment complexes. So it's not like as soon as Wall Street comes in, they get in, they institutionalize something, and then they back out the next day, and the values of apartments crash or things of that nature. This has happened before. There are actually positives as far as Wall Street coming into the housing economy at a certain level, which we get to enjoy. One of the benefits of Wall Street being in our housing economy is Wall Street makes decisions based on returns. And when prices get to a certain level and interest rates get to a certain level, Wall Street starts gobbling things up. And if you think about what happened in 2008 in the Great Recession and the housing crash that happened, there was no institution-based single-family house buying vehicle out there. They were not mobilized to do that. And so one reason why home prices fell as much as they did was because there was not institutions in the housing economy in 2008. So institutions being here provides a higher floor for pricing and greatly decreases the risk of another real estate crash happening. And many people don't think about that. There's other things that come into play that are benefits to institutions being here that aren't talked about, like for the fact that institutions are buying properties and partnering with home builders so that they can form partnerships to hold on to these assets for the long haul. And when they form partnerships, they're building new inventory. So they're actually bringing new inventory to the marketplace. It's called build to rent. And JWB started to do this in 2011. We weren't doing it at the scale that Wall Street is doing it now. We still do it. We still don't do it at their scale, but this is what got us on the front page of the Wall Street Journal in 2011. So this build to rent phenomenon, if you think about, is this helping or hurting affordability? Build to rent is absolutely helping affordability when it comes to rent prices, because builders, institutions partnering together are building hundreds and thousands of rental properties, which is increasing supply, which is helping with home price affordability. And people fail to see that relationship, that it's helping there. And then, I think that there's a lot to be excited about as far as the renter experience, because you have the ones with the deepest pockets and a whole lot of talent coming into this space. And I think the renter experience is set to benefit from that. You're already seeing that in build to rent communities where they have better amenities. And so they're creating this new space here. You used to just have single family or apartments. Really, where you're going is you're going to have single family, you're going to have build to rent communities, and you're going to have apartment living. And this, serves the need for residents that they just have never had before, kind of in between apartments and single family. So a whole lot of positives as well. There are negatives, and we can talk about the potential downsides, but I just want us to all see all sides of it, because there is legislation out there that is really demonizing Wall Street here. And, I think it really could hurt a lot of the good things that are coming here because of Wall Street's involvement. Some of the legislation says if you own, I think, over 100 homes or 1,000 homes, you're going to be forced to sell through just excessive taxation. And I just don't think people understand all sides of it here.
That's interesting, man. So, all right. So what I'm taking from you right now is this idea that, hey, let's have some perspective with what's going on. It's easy to demonize Wall Street. It's easy to do these kinds of things. There is some good things that are happening with it. There is still a big problem out there, which is home price affordability, but this thing is not going to fix it. This idea of demonizing Wall Street, because it's not what is causing the thing, right? So that is one side of it. Let's take like a real hard look at this thing and look at the benefits that come with it. I thought, when I first read this article, I was like, oh, this is referring to those kind of like 100, 1,000 home funds that they have out there, right? Like when I hear of Wall Street owning homes, I'm thinking of like one institution buying up a whole bunch of homes, operating them and selling them the same way that we were just talking about these like BlackRock type investments, which isn't what we're doing here, right? Like we're out here mostly buying ourselves a single family home to 10 single family homes to 20 single family homes that we each own individually. We might have it under a company, we might have it under our own name, but it's not this like, it's not the asset class that is being necessarily demonized in this article of talking about big institutions and Wall Street buying it. Is that right, GC?
Correct. They're taking aim at Wall Street or institutional investors, and we've largely defined that as institutions are investors that own over 1,000 single family rental properties.
So that doesn't feel like something that's targeted to us who invest with JWB or people that generally listen to this program that are more the mom and pop investor. And therefore it feels like, again, alarmist headline, but also not something that outside of this idea of maybe bringing up the idea that let's not get so quick to demonize Wall Street, but it's also kind of like, this is not targeted towards me either.
It's not targeted towards you, but if some of this legislation would go through, which it's not on the floor, it's not close, it's not something that's imminent, it is something for people to take notice of, it would absolutely affect JWB. We own over 1,000 properties. And
Correct.
So the business model would absolutely would have some effects if that was the case. So it is something to be aware of. And, I hope it doesn't go very far, because I think it's like taking a bazooka out to try to fix, a very small problem. You're better than with me.
Yeah, I got you.
You know what I'm saying.
Take a bazooka to a knife fight. I don't know.
There we go. Thank you.
Charity Graham's got an interesting question. The partnership with Wall Street and single family homes, do you see lease to own programs coming out of this for renters?
I'm so glad you asked that, Charity. One of the best things that I see coming from this is Wall Street's talent and dollars being mobilized to help increase home ownership. I look at that because I look at JWB, and that is a big deal to us. We want to help our renters become home owners, because this is a big deal for the home owner to take part in the benefits, and people to take part in the benefits of owning a home for themselves, for their financial future, and for also their future generations. It is like the single greatest thing that a family can do to set themselves up and their future generations. And it's great for communities, and it's great for society overall, for our home ownership rate to go up. And it's more profitable for Wall Street to get this right as well. I was literally just listening to the CEO of Invitation Homes, Dallas Turner, talk yesterday. And he talked about how he sees this as an opportunity to help folks go from renter to homeowner. And it's like he was living in my head, because that's where we've been for JWB for a long time, with the formation of JWB Realty, which happened over the last year, and a lot of our realty services being in-house and even more cohesive than they've been. A big part of that is helping our renters enjoy home ownership as well. And guess what? We're incentivized to do that too, right? So when things are aligned, incentives are aligned, and great value can be created, I think that absolutely is going to be happening. And I think it's really critical for our country too. home ownership rates have declined. They're actually the same rate today that they were 25 years ago. And if you knew that there was something that was going to set up yourself financially, your retirement, and future generations, and it was 25 years later, in the last 25 years, so much wealth and technology and improvements have been made in our economy that should create more wealth for individuals. If you knew that that thing, home ownership, was at the same level 25 years ago as it is today, that's a huge fail, and I think, and there's a lot of predictions that it's the highest it's going to be for a while right now as home prices are unaffordable. So it's absolutely a mission for us. And I am starting to hear Wall Street, I heard it from Invitation Homes, that it's a mission for them to be able to help more and more renters become homeowners.
Got it. Do you see anything else you want to touch on this article that you feel like we haven't hit on yet?
I do. I'm going to hit you with some stats because I think they're really relevant. Because there is a big fear that now Wall Street is just going to gobble up 30, 40, 50% of homes going forward. Like you said early on in this call today, Pablo, it was a time where Wall Street was like, I'm putting all of my money here because this is a great value to invest in. And, that's the same thing. They pushed all their chips. They front loaded their purchase plans. They're still buying, but they front loaded their purchase plans, which is the same thing that we talked about, what I advised you to do multiple years ago. But this idea that they're just going to continue at that rate just doesn't make a whole lot of sense. And we're already seeing that. So some of this legislation out there is like trying to fix a problem that we don't really even have anymore. I showed you those stats where, between 20 to 25% of purchases are investor purchases traditionally in the Jacksonville market. Well, guess what? In 2023, we had right around 20, 25% of purchases were investors. And because interest rates were so high, investor activity pared down. They're still buying, but investor activity is 20, 25%. So keep that in mind, that this fear that we have of Wall Street controlling and ultimately crashing a market or raising prices, or whichever way we want to look at it, the greatest time for that was probably 2 years ago, 3 years ago. With that being said, overall, again, if there are monopolistic type of activities that are going on where Wall Street would be, controlling so much that they could jack up rents and home prices and all of that, you'd have to have the FTC kind of defines a monopoly of right around 50% of a firm's market shares, where they start to look into that firm and see if it's monopolistic. In single family rental properties, institutions own only 3% of all the rental properties across the country. And that's all institutions. The biggest one player, if you're talking about somebody controlling the market, would be they would own less than 1%. So you are so far from a macro sense of institutions owning so much. Don't buy into those headlines that institutions own 30% of all the homes in America. It's less than 3%, and one institution owns less than 1%. So then I looked a little bit closer to Jacksonville, because that's the macro sense. One question that you may be asking yourself is, yeah, but what if they own a concentrated amount in one market? What if they wake up one day and they just want to bail and sell everything? Could that crash the market? Well, I'll give you some data on this. The largest single family property owner in Jacksonville is Progress Residential. They own 5,400 properties. There are 551,000 properties in Jacksonville, so they own less than 1% of the properties in Jacksonville. So I just think that perspective is good to know. That's not to say that they couldn't wake up one day and decide to sell everything. There's risks with everything. I think that's highly unlikely, though, because they have gone so deep into building this infrastructure. It's a great asset. Their investors are winning here, and they're forming more and more robust partnerships with home builders. So I just don't see that happening. But hey, it could happen, but we also need to look at the more positive side too, because I think what's more likely is that they're going to be here for a while, and that when market fluctuations happen, that higher floor is going to be there. And I think that's better for the economy overall.